Paul Katie, thanks very much indeed for joining us.
Give the government some confidence. Think about the economy more broadly going well for China. And the more interesting story is you look at TSMC.
Hi, I'm Paul KB, the founder of East Asia Econ. Welcome to the East Asia Econ YouTube channel. I'm here to talk about what's happening in Korea and Korea's economy, which I think is quite interesting at the moment in the sense that it's been one of the big victims of the Iran war in terms of the impact on Asia. We can see that with the big sell-off in the equity market and what's happened with the won in particular. At the same time, I think there are some trends in Korea which should be very supportive for the economy. So I'm going to talk about Korea today, what the outlook for the economy might be, and what investors need to understand about what's going on. Now, before I get on to that, I wanted to ask three things of people watching this video. The first is, if you like it and you find it interesting, and frankly, even if you find it boring, then please recommend it to your friends. You might want to recommend it more to your enemies if it is boring. But please think about subscribing to the video and recommending to other people, because that would be very useful for me. The second thing is, please check out our website, eastasiaecon.com. We do have a huge amount of information on it now. It's all about that you can use it to track what's happening in the economies of Asia. We have lots of data, visualization charts. Also, we have an API, which has about 700,000 different data series. This is all available for subscription. And so please check out the website if you're interested and look at the choices that are available. The third thing is, if you're a professional investor, then really the day-to-day stuff that I'm doing is focused on you. I'm trying to do a lot of cycle data, following all of the releases that governments produce, tracking the cycles in a lot of depth, and also thinking about the structural issues that inform what's happening with markets. So we have a dedicated service for financial investors. And if you're interested in that, then please get in touch with me directly for more details. So with that, on with the show, as we say. And so today I want to talk about what's happening in Korea. And again, I think Korea is a very interesting economy. It is somewhere that is puzzling, I think, in some of the trends that are going on. And so if we think about kind of regionally where we are, I think that, the story in Japan is pretty straightforward at the moment, in the sense that inflation pressure is rising. That's in the context of the economy being quite strong. Obviously, there's some risks from a global downturn from the Iran war affecting that. But we can sort of understand what's happening with the economy and some of the market responses, right? The yen is weak because the central bank is very easy in terms of policy, for example. If we think about Taiwan, it's also, mainly understandable what's going on in the economy. It's interesting. The economy is booming. It's very strong. We can look at the current account surplus and so on. But I think a lot of the things in the economy actually add up. But when we think about Korea, it's actually there's quite things which are more confusing in terms of understanding the direction of the economy. And that's what I want to talk about a little bit today, and then think about the market implications of that. And so I'm going to talk about kind of 3 or 4 things. The first section is just to look at what's happened since the Iran war and what the impact on markets has been. So that's going to be the first thing I talk about. The second thing is particularly focusing on the currency, which continues to look extremely weak. And try and think about some of the reasons for that. The third thing, think about inflation and some of the structural changes that have happened in the economy. And the final thing, what all of that might be. So the first section, thinking about what's happening with the economy and the markets over the course of the last few weeks or so. And 2 things really stand out. So one is that the Kospi has sold off, very strongly, particularly in the opening days of the Iran war. Seems like it's one of the big casualties of the big financial casualties of the conflict. And the second thing is also the won. And so the won, already looked very weak, pretty close to sort of the weakest against the dollar it's ever been. And then since the Iran war, it fell through or, went above the 1500 level against the US dollar. And so looked even cheaper than it did before. And so some of this, right, why has this been happening? Well, we can, some sort of things that would be easily explainable. As we've explained it in previous videos, Korea is very dependent on energy imports from the rest of the world. The energy price goes up, then it has a problem in terms of it needs to finance that. So that's an obvious thing. Another thing that's happening in Korea and explains some of this sensitivity that the economy has had to these events in the rest of the world is that the Kospi was enjoying this, stupendous rally before the Iran war hit. And so it's probably one of the best performing markets in the world. And so in a sense, it was a very frothy market the fact that since then there's been a conflict and an external shock, markets have readjusted. In some senses, it isn't too surprising that the Kospi has fallen as a result. And so that kind of context of being a very strong market then informs what happens when there is a negative shock that hits the economy. But that's nonetheless where we are today. The won has been quite weak, and the equity market also has sold off as a result of the Iran war. Now, the other thing I suppose that's happened, and it helps to inform why that market reaction has been quite strong, is because I think some of the policies the government has used have been quite ham-fisted. And so in particular, we've seen it elsewhere in the region, governments trying to hold down energy prices. In Korea, that was done in a way which didn't look very transparent. It wasn't clear how exactly this was being calculated. And so the policy response is kind of an emergency policy response where the government does seem much more worried in Korea about the energy shortages than perhaps governments in the rest of the region. That's the other thing that's informed what's happening with, this poor response of the markets to what's happening with Iran war. So that's the the third part of the equation. Now, so where does that leave us? I think particularly in terms of the won, it's the most interesting market aspect to focus on. And again, I've seen this, if we look at this chart, which shows the Korean won on a basket basis, so not just against the dollar, but against the basket of all the trading partners that Korea has, it's clear that the Korean won does remain extremely weak. Now, why is that interesting? Because there is a flip side to this. And it's obviously clear that Korea does import a lot of energy from the rest of the world, like energy import dependency is about 90%. Some of that does come from the Middle East. This will be something of a problem. But if you look at this chart, I think it does give some context. So this chart is showing the energy import bill that Korea has against the exports of semiconductors. And this, I think, is the big story that seems to have been ignored over the course of the last few weeks or so, that there is something seemingly real happening in Korea's economy, which does offset or should be offsetting the impact on the economy that's happening in higher oil prices. And that is that there's been this sort of unprecedented rise in the prices of the memory semiconductors that Korean companies specialize in. As a result of that, exports are rising by 50% year on year in March. And the trade surplus and the current account surplus in particular have risen to highest ever levels at around 15% or so of GDP. So there should be this, as much as we know in global markets that the trade surplus and real current account numbers aren't the only thing that drive currencies. But I think in thinking about the Korean won, it should still be true that this is a substantial change in the way that the economy works. That there should be less vulnerability to external shocks in Korea because the current account surplus is large. And as a result of the current account surplus, Korea, compared with, say, 10 years ago, is now a net saver internationally rather than being a net debtor. And again, as much as capital flows are a more important story in driving where currencies go, in terms of thinking about the vulnerabilities of the economy, which seems to be one of the reasons why markets have reacted against the won over the course of the last 4 weeks or so, in terms of that, this improvement in the current account position, which cyclically is being driven by this remarkable increase in semiconductor prices, which is now getting reflected in exports. This should matter in terms of thinking about the currency. So I think that's one thing to be thinking about. And if we kind of bring that together, so thinking about what's happening with the energy prices and what's happening with semiconductor prices, the clearest way of illustrating this is to think about the terms of trade in Korea. So the terms of trade is just the difference between export prices and import prices. Why does this matter? Because if export prices are rising more quickly than import prices, then the domestic economy is gaining purchasing power relative to the rest of the world. This is an increase in incomes. It's an increase in national income relative to GDP. It should be positive for the economy. Now, what we can say in Korea is it's highly likely, as in the rest of the region, that energy prices are going to be increasing quite quickly from here. But we are in a situation where export prices from Korea have also been increasing. And so again, there's an offset to the energy crisis that hasn't been seen previously in Korea. And again, that is something I think should matter for the economy. It should matter, therefore, for the currency. And so we have a situation where Korea has been sort of punished, or at least looks like one of the victims of the oil price crisis. And when we look at some of the cyclical stuff and the way the economy is positioned, it shouldn't be reacting in such a big way. So that's one of the puzzles, I think, about Korea's economy, which is interesting, and using that to think about markets. So this would suggest that the Korean won remains too weak and should be appreciating. Now, that has been my view for a while, and it hasn't happened. And so that is important, at least for me, in terms of thinking about where my view might be wrong. The other thing I think is interesting, where I also looks the looking at Korea's economy has been confusing, is what's happening with inflation. And so if you look at this chart, this looks at CPI inflation over the course of the last 10 years or so. Why does it matter? This isn't overall CPI. This chart is looking at private services CPI inflation in Korea. Now, why focus on that? Because when we look at inflation, you can put lots of the basket is a broad range of items that consumers purchase. That includes both imported goods, domestically produced goods, and also services. Now, the reason for focusing on private services is because, first of all, looking at services in general should be a better measure, or at least, we should be bearing this in mind as a measure of domestically generated inflation rather than inflation that's imported from the rest of the world. So I think services in general are useful to be watching in terms of prices. The second thing in Korea in particular, because the other part of services is public services prices. And public services prices are obviously affected by what the government does in terms of policy. And so particularly right now, thinking about the energy price shock, one of the things that we're seeing across the region, again, is governments holding down energy prices. And therefore, for electricity, for example, electricity prices wouldn't be increasing as quickly as the market would say they should be. And so there's manipulation or adjustments that need to be made to the data. So again, differentiating and just looking at private services inflation, I think, is important. Now, what does this chart then show? It shows that inflation in Korea is running at about 3.5% in terms of an underlying number of private services inflation. Now, that is very strong. It's very strong in an absolute level when the Bank of Korea is focusing on a headline rate or a target inflation of just 2%. But it's also very strong relative to what's been happening with the economy. So the Bank of Korea has a target, or has an estimate of potential growth. Now, potential growth is how quickly the central bank thinks that the economy can grow without generating inflation. And usually that then is looking at if actual growth is above potential growth, then the economy is using up capacity that isn't there, and therefore it's likely that prices are going to be rising. If potential growth is if actual growth is below potential growth, then you tend to see inflation falling. And so the significant thing about Korea, as this chart shows, this looking at actual growth in Korea relative to potential growth. And since the end of 2022, there's only been 2 quarters in which actual growth has been above the BOK's estimate of potential growth. So throughout this period of time, there should have been a deflationary process playing out in Korea's economy, and yet private sector services inflation has been rising. It's been quite strong. So this is the other puzzle, or one of the other puzzles, I think, in thinking about Korea's economy. One is this weakness of the won. The second thing is what's happening with domestic inflation. So that is, so what to do about this, or how to try to explain these things? And I guess there's the significant thing here is there are some big structural changes happening in Korea's economy, or some big structural shifts that have been seen over the course of the last 5 years or so in particular. One of those is now that fiscal policy is much looser in Korea than it has been before. And it really looks like 2019, probably before COVID, in fact, there was a sea change in fiscal policy in Korea. But before that, there was always a reluctance to spend money. There was always a reluctance to run a fiscal deficit. And Korea historically tended to run fiscal surpluses. But since 2020, there's always a fiscal deficit in Korea. And actually, when the government talks about fiscal tightening, or at least trying to rein the deficit in recent years, that process hasn't amounted very much, and we still end up with having a fiscal deficit every year in Korea. So this is if you look at it, it really is a step change, right? But before 2019 and after 2019, the fiscal deficit really looks very different. So this looks like, as much as it's sort of, we can trace like the fiscal impulse, we can think about the cyclical impact on GDP and so on. Like, this is also something which I think is more of a change in the way the economy operates, sort of akin to a structural change in the economy, because it doesn't look like fiscal policy is going to be managed in the future in the same way it's been managed in the past. So that's one thing. The second big change that's been going on is what's been happening with the labor market. And in the labor market, there's two or three very big shifts that have been happening. One, there's been a big increase in the participation rate, particularly of women and of elderly workers. And this is something that we're seeing in Japan, sort of from 2013 or thereabouts, but it's also been happening in Korea over the course of the last few years. The context for this happening, for this increase in the participation rate, is an increase in the proportion of part-time workers, part-time jobs in the economy. So that's risen quite substantially. It's up to about 30% or so of the overall employment base that the economy has. Now, why do these things matter? So it's changing the way that the labor market works. And one of the impacts of this chart, which shows the average working week that's worked in Korea. And so what you see is, over the course of the last 2 years, it's been steadily declining. And so again, there's big structural changes happening in the labor market. And I think, if we look at wage growth in Korea, wage growth does look like it's quite low, and it's been slowing, particularly, as this chart shows, for wage growth for permanent workers in Korea. It's running at about sort of 2.5% or thereabouts. It's really been weaker in Korea. And if we look at Korea relative to the other economies of the region, it does now look like Korea, which previously was an outlier with wage growth much higher than the rest of the region. Now wage growth in Korea is basically in line with both Taiwan and Japan. It doesn't look like it's an outlier anymore. Now, that would suggest that actually inflation should be slowing. Instead, we have this situation when actual inflation looks like it's higher. Now, there is a sort of a mechanical, sort of statistical reason for this, that one of the things that's been pushing up inflation specifically is one item within the CPI, which is insurance. Insurance prices are rising by 15-20% year on year. That is partly because of regulation. And so it might not be fair to think about inflation being as high as it is. But I think it is still important, and it stands out. Because if the labor market really was, if capacity utilization really was as low as the official GDP data suggests it would be, and if wage growth was as low as the labor market data suggests, I would have thought that actually we would see a more obvious decline in inflation over the course of the last 2 to 3 years, and that hasn't actually been seen. So I think there's two puzzles, or two standout features of the economy. One is in terms of what's happening with inflation and how high inflation actually is, and the second thing is what that like the positioning of the won. Now, where does this go from here? So if you think about the second thing in terms of inflation, again, I think with the oil price shock, given that underlying inflation in Korea hasn't slowed very much, it makes it more likely that the BOK has to be hawkish, because inflation already wasn't very low, and now there's a new upside risk to inflation happening because of the increase in oil prices. So I think that means it makes it more likely that the BOK has to be more hawkish in terms of interest rates from here. Now, that is particularly the case if we see this increase if we see the AI semiconductor trend continuing. And so one easy way to think about that, and again, coming back to thinking about inflation and potential growth, the BOK thinks the potential growth in Korea is about 2%. Before the increase in semiconductor prices and the increase in semiconductor exports, the BOK was saying that growth would be 2% this year. So it's basically in line with potential. And in that situation, the central bank would argue that inflation isn't going to accelerate. But as soon as you start to think that semiconductor exports are going to do well, it makes it more likely that the government's going to actually have to raise raise growth forecasts. Now, again, there's the risk coming from the Iran war and the impact of growth that that might have. But just looking at what we know so far, it would look more likely that actually the government ends up, the central bank having to raise growth forecasts, and therefore raise inflation forecasts. And that means there's more room for interest rates to go up. The second thing is then about the currency. And the one thing, so again, like the currency is extremely weak, frankly, relative to the improvement in the current account surplus that happened over the course of the last few years. Now, the way to explain that from more mechanically is like, semiconductors are earning a lot of money and that money is coming home domestically. But from a savings investment point of view, as this chart shows, which looks at the breakdown of savings in the domestic economy, the reason the current account surplus have been rising is because households have been saving a lot more money than they were previously. So since the early 2000s, the household savings ratio in Korea has expanded quite a lot. Now, what does that mean? In theory, that means that provides the background for the current account surplus to rise, which is something which should be supportive for the won. At the same time, though, what we've seen in terms of the capital flow out aspect is that households are taking a lot of that money and investing it overseas in US equities in particular. And so in a sense, like this rise in the household savings ratio explains both why the currency should be stronger and the reason why actually it hasn't been stronger, because it's a flow of money into the economy that essentially then it gets re-exported to the rest of the world. And so thinking about where the currency goes from here, it could be basically as simple as this. As long as the chip cycle holds up and therefore the current account surplus is strong, that will start to matter for the currency in a significant way if domestic households in Korea stop taking so much money overseas and investing in US equities. And so that, I think, would be, is the thing to be. As much as I would argue the currency looks weak, there still needs to be a trigger for that to change. The trigger for that changing is not the oil price going up a lot because of the Iran war. Clearly, that causes the opposite effect. But the trigger would be some sense that retail investors are starting to tire of the US market. Money therefore starts to come back into Korea, and then we start to see more appreciation of the currency. Now, that I think was my expectation, but we haven't seen it yet. So I wanted to today going through a few different points about Korea, looking at why it's been exposed, particularly to the Iran war, what the policy responses of the government might be, and then exploring some of these puzzles around the economy, and particularly like what's happening with inflation and so on. If you're interested in these issues and more, then please check out the website, eastasiaecon.com, or get in touch with me directly. Thanks very much for watching.